You know how I work, guys, girls. Please read this and take it on board. I'm desperately trying not to say read it, digest it, because Mitch always takes the pee out of me for saying that, and Dom has started as well. So clearly, I need to knock that right on the head. But feel free to pause it and make your way through it. Ultimately, if this, like me, I think I've done about 40 odd videos now. So if you've got to that stage where you've watched the previous 39, 40 videos, you know what to do. So we're going to talk about the Cypher pattern then. A very flexible pattern. We'll go into the ins and outs of it very shortly. But you know, this is a generic slide that's in all of the vids. If you've watched previous vids, then feel free to skip this one. If you've jumped to this one because it's the one that you wanted to trade, then obviously we shall go through this slide for you. So patterns that we normally trade then are based on structure. Bear with me 2 seconds. Okay, just had a bit of a coughing fit there, I do apologise. Right, so everything that we normally trade is based on structure, and we know this: double tops, double bottoms, triple bottoms, head and shoulders patterns, working off trend lines, descending, you know, channels, ascending channels, triangles, etc., etc. What we do with harmonic patterns is we work within Fibonacci related relationships. So from one point to the next, they bounce from one fib level to another even, causing an in structure to be produced, and this is a harmonic pattern. Most traders, the swing traders amongst us, will use the other patterns from one extreme to another, expecting a breakout, and then we move into a trending direction. But a majority of the time, most of the charts sit in what's called a consolidation area. These are the areas where these patterns are going to jump out to us. So for the big swing traders that I've named previously, like Jamie, Mitch, Rob, who's another good trader, they're looking at big massive moves that are going to work from one extent to another. When we're looking at harmonic patterns, we're looking at consolidation areas. So where they have moved from one trend, dropped into another area, trends ended, then they're in consolidation, and that's where we're going to find these patterns. And that's where, 70% of the time, consolidation is. All right, go through any chart on any time frame you want, and you'll see it moves from A to B, and then it'll bounce within a consolidation area before another move. And that's what we want to find from this. So each harmonic pattern has 5 parts, or 4 legs after the impulse leg. X to A is the start. X is the start of the trend. A is the end of the trend. Okay, that's your impulse leg. B is the first pullback of the trend. C is a pullback of the pullback. And D is the target from letter C, which would also be pattern completion. So, Cypher pattern then, originally discovered and defined by Darren Oglesby, who I believe it was trading powered. That was one of the first videos I watched, feels like forever ago now, where obviously part of their training was to go through harmonic patterns. Not very dissimilar to this, however, I know for the fact that some of their patterns are a little bit different to the ones that we've got here. And that's due to me trading the way I trade and the way I back tested them. However, feel free to drop onto Trading Powered stuff and have a look at that. Very, very good tuition, very, very good stuff. And as I was just chatting with Jamie in VIP, if what we achieve here is a patch of what they've got, then I'll be very, very happy. So bear in mind, guys, I haven't invented any of these patterns. This is stuff that's come from lots of looking at the way other people use them and basically trading it my own way. So the one thing that you need to know about the Cypher pattern is it's a 4-legged pattern. It's not as common as other patterns, though it's widely used in harmonic trading and analysis. Now, when I say it's not common, it is common, especially when you look at certain scanners out there that will give you ciphers every other pattern. However, they're not what I would class as a full-blown cipher, as in not in the definition that I would use them. when using a Cypher pattern, you need to make room for adjustments, and I'll break that down a little bit more when we look at entries and exits on the trading. And with the fib levels, you need to give them a little bit of room. The win ratio for this pattern is very good, but you need to allow this pattern to breathe. And you know, as any decent trader will tell you, price action is the only true indicator. So we always need to look left for clues, look for structure, and that will help in our analysis. When we're breaking the pattern down, we need to understand certain things, and that be the pointers as per previous videos. So number one, the A to B should be a minimum of a 382 and a maximum of a 618 retracement of the X to A. Number two, B to C should then retrace between a 127 and a 138 extension of X to A. And the C to D leg should break the 786 of X to C. That's where it gets a little bit different on this pattern, guys. Unlike others where we're looking at completion zones, this one works a little bit different. So what we're going to do now is in the next couple of slides and couple of vids, we're going to break that down and make it easier for you. So bullish Cypher then, X to A, or the impulse leg, or the anchor leg, or structure leg. It's called many different things, but I prefer impulse leg. We then get a retracement, A to B, a minimum of a 382, maximum of a 618. B to C is then an extension of the X to A from a 127 to a max of a 138. And then the C to D needs to breach the 786 from the X to C leg. That's different to what we've done before. So let's break that down. Let's look at a bullish Cypher, and let's do it on trading view and draw one. So X to A, impulse leg, fib retracement, swing low to swing high. A to B, anywhere between the 382 and the 618. If we breach the 618 at this point, guys, we know at that point we're going to be looking for other patterns. 10 points if you can guess which other patterns they are. I'm not actually going to give you 10 points, that's just a saying. So then the next fib, okay, we're looking for that extension. So on this one I'm using the retracement tool and just doing it from high to low, so from A back down to X. And then we're looking at that 127 and 138 extension. Okay, let's delete the fibs, let's get it clearer, because this is where we have to differ now. We then need to draw a fib from X, swing low, to C, swing high. And then we're looking at that 786. Now some would argue, well, Brandon, you know, I've looked at it and it's still valid if it's an 886, and it's still valid if, as long as it doesn't breach the X. Well, you know what? That's down to you guys. When I trade this pattern, and we'll talk about this when we get to the end of the show, for me, I will be looking for reversal within this zone. So as soon as it breached 786, I wouldn't enter at that point. I'd be looking for structure and clues to pull the trigger. And as I've said in previous videos, that could be an MA cross, it could be an MA cross arrow, it could be price structure alone, candle structure. So I could be looking for a doji, a morning star. Either way, you through backtesting will figure that out for yourself. These are basics, guys, that you need to go away, backtest and tweak to your own liking. Ultimately, it's your trading plan. You know, plan your trade. Trade your plan. So we're going to move to bearish Cypher. Exactly the same, but it's flipped on its head, guys. So the impulse leg X to A to B retraces 382 to a maximum of 618. B to C is then an extension of the X to A 127 minimum, maximum of a 138, and C to D is a 786. I was chatting on VIP chat earlier in relation to some of the scanners out there. I was chatting with Cole. And that had actually drawn a Cypher before it was complete. Now, naivety within pattern scanners people would be taking that trade at that point, not fully understanding. And as much as I agree that scanners are a good thing to initially get your eye in there, knowledge of the pattern will give you that added edge. And by printing these off or making notes when you do use scanners, yeah, it'll give you the heads up initially to say this could be a pattern, but please, please, please go away and learn this stuff, because ultimately the more knowledge you have, the more tools in the toolbox, the better trader you're going to be. Now, that's not saying that, you know, swing traders need to delve into 15-minute charts and scalpers need to start looking at weekly charts. But ultimately, if it fits within your plan, then you need to make everything that's in your toolbox suit your plan. And we're going to talk about this more in further videos, so I'm not going to bore you with it now. Let's look at a video then on a bearish Cypher. I'm going to use, instead of the, I'm going to use a fib retracement tool on this one. So you got X to A. We use the fib retracement, down, swing high to swing low. We're looking at the pullback from the A to B to the 382 to the 618. Anywhere in that zone. You can't breach the 618, otherwise looking at other patterns. And this is where I'm going to use the fib extension, rather than the fib retracement on TradingView. And this is where you draw it from swing high to swing low and straight back up again. So back up to the X leg, and we're still getting, as you can see, we're still getting that 127. That's the minimum we need. I haven't drawn the 138, please forgive me, that's bad planning on my part. However, we should put it around this zone, which is probably just above the 382. You sort of get used to these zones after you've been drawing them a bit, and I'm sure you guys will. It also helps you spotting. Also then, we drop back to the old fib retracement. It's X to C, unusual pattern. Unusual for patterns, obviously doing this, and we're looking for a break of the 786. As I've previously mentioned, this could be the 886. Oh, Brandon, you know, I've back tested this pattern. I've looked at it in the last 100 times. 80% of the time, it stayed within that 786, 886 zone. Well, that's good. That's then your plan when you're trading this pattern. For me, like I've previously said, I'm just looking for a trigger of price reversal after it's breached the 786. So dropping back then. So we're going to look at the trade in the Cypher then. Obviously, we usually put that stop loss above the X. Now, I've told you my reasonings behind it in the past. You know, well, ultimately, I will watch this live, and if I'm trading it live, I'm not going to enter the trade until I've seen price reversing the PRZ. So in which case, I can afford to have that stop quite close to the X. Some will say, well, Brandon, to be fair, I'm thinking this pattern's forming. It's the night before, so therefore I'm going to set a pending order at this level. Well, that's great. Well, if that's the case, then you are going to set that stop 10 pips above the X, because you're going to need to give this pattern room to breathe. The whole part of the Cypher is you need to give it room to breathe. Ultimately, once you've had your trigger and you've left that reversal zone, you can then enter from your entry point and take profit one down to a 382. Some people like me will then scale out, move to break even, and then run half the trade the other way. Some will just let it run to, you know, end the trade at take profit one, wait for the pullback, and then once you get another reversal, trade again down to take profit two from the same amounts. But that's down to your trading plan, guys. The one thing that you need to know on this is, instead of it being an A to D on the fib for your target levels, it's C to D. So that last leg is where you're going to draw your fib, as clearly shown on this image. It's from the C up to the D. And that is where your levels are. The one thing I want to add about stop losses and patterns, and that when you look at all the other vids and I say, well, it's just above the X, or just below the X, or 10 pips this, or 10 pips that, don't get completely zoned in on structure. We talk a lot about looking left for clues, you know, and price action being the strongest indicator out there. If say we've got this pattern, and we've drawn the pattern here from X to A to B, B to C, and that's the level X is at that level. Let's just move this down, just so we're at that level, okay? But you know, further back here, we've got another 10 pips where there is another high before we've entered in this pattern, okay? And you draw a fib from this higher point, for example, and it's still broken that 786. I would strongly suggest that you bear that in mind, okay? And we, like we've said, you know, if I'm going to set a pending order, then I would definitely look for previous structure. If I'm already waiting in that reversal zone and my trigger has been set and I've had price reversal from my PRZ, then I'll use the original X that I'm trading off the pattern. Does that make sense, guys? I hope it does. Don't get sucked into the zone where you are just looking at your pattern. Please look left for clues. There may be other structures prior to this pattern being drawn that may affect your trade. But always remember, if you're using these harmonic patterns as part of your plan, then stick to it. Please, 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 if you're a big swing trader, then don't get looking at these in smaller time frames and vice versa. If you're a day trader and you're looking at the big swings, then by all means still use these patterns as they are still out there, but use them on bigger time frames. If you're like me and you're intraday, then use them on smaller time frames. But please use these patterns to your advantage. They are there, especially when we're in areas of consolidation, which is the reason why I created the section in the first place. Again, thanks for your time. You know where I am, but always remember, plan your trade, trade your plan.